Big question right now, how are buyers affording to buy? Interest rates are really hurting affordability, and with prices also high, some buyers are scratching their heads right now wondering if they're gonna make it work out to buy a house this year. Lots of people are also asking, is it still a good time to buy? Does it feel like a good time to buy? No, not really. Is it? Yes, it actually is, and I'm gonna tell you why. Most buyers are riding the bench right now. They are waiting for rates to come down or for the election or for, here's my favorite one, I'm gonna wait for the bottom to fall out on prices. Prices are gonna crash and I'm just gonna scoop up a good deal when that happens. You're not the only one thinking that. I have been hearing this steadily for the last year and a half. And guess what? All those people, they're still renting, they're still waiting. If you are renting a home for $2,000 a month and in Vancouver, that's gonna be a really good deal. Then it's likely that you have now spent over $18,000 paying someone else's mortgage while you are waiting patiently for rates to come down or for the bottom to fall out. I do have a great tool I want to share with you that compares buying now versus later, factoring in appreciation, but that's not the topic of this video. Today I'm talking about interest rate buy downs, and because if you are considering buying a house, you need to know what this is and how to use it. One more thing to add about, is this a good time to buy or not? Like I mentioned, lots of people are riding the bench. And I want to remind everyone, if you were looking for a house during COVID when rates were 2.75, 3%, if you were looking for a house then, it was an uber seller's market and buyers were paying way over asking. It was bidding wars everywhere. I was prepping every buyer with appraisal gaps, right? So if you're gonna offer $50,000 over asking, you need to be ready to also tell the seller that you have that extra $50,000 that you're just gonna hand to them when the house does not appraise. So with so many buyers on the sidelines right now, it's such a good time to buy. When rates do come down, all of those buyers are gonna come back. And it's gonna be an uber seller's market again. That's my own prediction. I think that when rates come down, buyers are gonna come back. That pent up buyer demand is gonna surge and it's gonna get a lot harder and more expensive because home prices are gonna rise again. So yes, rates are tough right now, but there's things that you can do to navigate the rates, and I'm gonna talk about that today. Thank you for watching. I make a new video every week on life and real estate in Southwest Washington. I was raised in Camas. I have lived most of my life in Clark County. I've been selling homes here for about 10 years, and I would love to chat with you about your upcoming move to the area if that's what you're watching these videos for. If you want to chat anytime, you can reach out. My cell phone number, email are up above. They're also in the description down below. I do have a home search website. I'm going to link that on the screen so you can go take a look at that. It's searchhomesvancouverwa.com. And don't forget to subscribe and turn the bell on for notifications so that you don't miss a video. I am posting a new video every week, like I said just a moment ago. All right, back to the topic at hand. The most important thing I'm gonna say in this video is go talk to your lender. I am not a lender, I am not a financial advisor or an expert. My job is to know how to save you money. And in this case, it's just, I'm educating you on the topic and then I'm sending you off to talk to your lender about options. Interest rate buy downs can be a useful tool for home buyers to lower their monthly mortgage payments. Lots of buyers are doing this right now and lots of sellers are open to help you pay for it. An interest rate buy down is a financial arrangement where a home buyer, the seller, or a third party pays an upfront fee to a lender in exchange for a reduced interest rate on the mortgage loan for a specified period. This upfront payment is often referred to as points. Points are typically expressed as a percentage of the loan amount. For example, paying 1 point might cost 1% of the loan amount. Each point paid typically lowers the interest rate by a specific amount. The exact reduction may vary depending on the lender and market conditions, but it's often around 0.25% of your interest rate per point, which usually costs 1% of the purchase price. The reduced interest rate remains in effect for a predetermined period, such as a few years, sometimes the life of the loan. If it's a smaller period, it would then return to the original rate specified in the mortgage agreement. So how does this benefit you as the buyer? First of all, it's going to lower your monthly payment. By paying points up front and reducing your interest rate, you're going to get a lower monthly mortgage payment, making home ownership more affordable. Second of all, it's going to save you money over time. Over the life of the loan, you can save money on interest payments if you plan to stay in the home for an extended period. So this all sounds like an easy breezy way to reduce your mortgage payments, but there are some important things to consider. First of all, paying points requires an upfront payment, which can be a substantial amount. You need to consider whether the long-term savings on interest outweigh that initial upfront cost. If you're saving $500 a month on interest and it's costing you, let's just pretend $15,000, how many years is that going to take to balance out where you've now broken even? And that's what you need to do. You need to calculate that break-even point to determine how long it's going to take for the interest savings to surpass that upfront cost of buying down the rate. If you're planning on being in the house for 10 years and the rate buy down cost is going to break even in 3 years, then obviously it's going to be worth it to do so. If you are planning on selling or refinancing in a few years, then it may not make sense to pay points, as you may not recoup the upfront costs. So here's the most important thing I have to say today. We can negotiate with the seller to cover some or all of the points as part of your offer. This can be a win-win situation if the seller is motivated to close the deal. Right now, many sellers are sitting on a ton of equity. They watched their home prices skyrocket during COVID. And as I mentioned before, lots of buyers have stopped looking due to rates. There are motivated sellers out there who are willing to kick in $10,000, $15,000, even $20,000 to help pay a buyer's closing costs and buy down their interest rate. So this comes out of the seller's net proceeds at closing. It just affects how much they're making on the sale. Call me with any questions about this topic. It's a big one, and if you have never heard of the concept, it can take a minute to wrap your head around it. My phone number is here on the screen. It's also in the description down below. I can connect you with a lender who can walk you through these various loan scenarios and also get you fully pre-approved before you start looking at houses. All of this information and a pre-approval letter is going to make you a very strong buyer so that we can get you a great deal on your home purchase. Thank you for watching. See you next week.